Hi everyone, welcome to today's video. So today I have a very interesting video for you. I'm going to compare HDFC Bank with ICICI Bank. Now many of us might be investors in one or both of these banks. Super important category in terms of the growth of India because the banking sector in India needs to grow for India to become really big and benefit from the bull run that is currently happening. So therefore, it's a very important video. Please watch it till the very end. I have some very important recommendations for you. I might not tell the answer towards the end. I might hide the answer somewhere along the video. So you have to watch it till the very end. Okay, please press the like button. And also, since we are on the concept of banking, a big shout out to our knowledge partners for this video, which is Jupiter. Jupiter is a neo bank. It's a new age bank. I have done a separate video on what neo banks are. Banks like Jupiter are likely to define the next leg of growth in the Indian banking industry. So do go and check out that video. And also there is a link to join Jupiter. It's a limited invite. So you can check the link in the description box. It's an excellent concept. Jupiter helps you track your money better, save your money better and spend your money better. So go give it a go and also understand the concept of neobanks because they might actually be disruptors in this space. So with that said, let's get the video started and let me cover this video into three specific buckets. First, let me help you understand some of the key shifts that has happened in the business of ICICI Bank and HDFC. Let me quickly cover that. Then I will also cover where we are currently standing in terms of HDFC ICICI Bank. Second, I am going to comment a little bit about the financials and why is it that ICICI Bank has been picking up. That's two. And third, I am going to give my verdict as to which bank I am investing in and what is it that you should be doing as a sensible investor. Along the way, we will also discuss the long-term prospects of ICICI Bank and HDFC Bank. So before I talk about both HDFC Bank and ICICI Bank individually, there is a very important point that we must understand about these banks. The point being that both ICICI and HDFC are considered to be domestically systematically important bank. DSIBs as per the RBI's mandate. So these are few of the most important banks in India. What it simply means is if something bad happens with HDFC and ICICI, that the government is going to step in and save the depositors, which gives us the confidence that both these banks are really good at the core. They are big. They have already gained a lot of traction in the market and there is nothing to be afraid of if you're a long-term investor in these stocks. Now with that said, let me just quickly touch upon HDFC and let me show you an article that was published a few years ago when everyone was going gaga over HDFC Bank. They were touting it as the next best thing in the banking industry, not only in India but abroad also. So here is the article for you and I will put the link in the description box. So do check it out. And this is the article and it was published on 1st August 2012. The headline says that HDFC Bank is now one of the most valuable in the world, beats biggies like BOFA, BNP Paribas, etc. Right? And then there are some good things mentioned about it. And this table is very important because it just encapsulates all that was happening back in 2012. So HDFC Bank's total assets were growing at the time and its market cap was also growing. Its price to book ratio was trading at a very high value. Its return on equity was the highest in the banking stocks across the world. Its return on asset was one of the highest in the world, 1.8. You can see this from the chart. NIM was also one of the highest in the world. So if you would have invested your money looking at all this data back in 2012, you would have purchased HDFC Bank at a stock price of approximately 330, 350, right? And today the stock is trading at approximately 5x its value. So it would have given you 5x returns, which is massive growth. Now at this stage, you really need to ask yourself the question that, okay, we are sitting in 2021. If I'm looking at HDFC's stock price in 2035, how much money can I make? Can it go to 8,000 rupees? My answer is yes, it actually can, and I'll explain that subsequently on the video. But before I move on to that discussion, let me also quickly cover the context around ICICI Bank. And this is a very interesting chart about ICICI Bank. And you can take a look at this chart. This is historic data up until 2018 on ICICI Bank. I will ask my editor to zoom onto this chart and you will see some very interesting facts here. So the bank index is highlighted in blue and you can see that bank index was approximately trading at 450, 500 level around the end of 2017, starting of 2018. But ICICI was trading well below the bank nifty level. It was trading at approximately 370, 350 levels. So what does it indicate? It indicates that back in 2017, towards the end of 2017, ICICI was a laggard stock. there was something off about the ICICI Bank, Chanda Kochar problem, NPA problem, bunch of different problems due to which it got factored into the stock price for ICICI Bank, and it was lagging behind till when? Till the start of 2018. Post 2018, ICICI has been growing at a massive pace, and now people are giving the narrative that, you know what, that ICICI is now going to demolish. It's really going to replace HDFC Bank, and HDFC Bank will become like SBI. Okay, so joke on SBI. But the bottom line is that right now people are imagining that, you know what, ICICI is growing at such a massive pace that it will just displace HDFC Bank, and HDFC Bank will bite the dust. We always love these kind of fights and narratives, and therefore we end up taking these type of positions. So let's move on to section 2 of this video, where we are going to take a look at financials and try to build a sense whether or not this is likely to happen or not. Now, this narrative that ICICI Bank is going to beat HDFC Bank has been fueled by the media also. Now, here is an article for you, and I'll take you to my screen. So this is what the article says. This was published on April 25th, 2021. So the article says that ICICI Bank has outpaced HDFC Bank on nearly every count in the last 3 months. Okay. So let us look at this, right? So ICICI Bank, HDFC Bank, there is a nice table that has been drawn. It has shown that on every parameter, ICICI Bank has been thrashing HDFC Bank. It is true, but you also need to see this in context of the data that I had shown you earlier, that till the start of 2018, ICICI was a laggard stock, and now it has started gaining momentum. That is all that is happening. It does not mean that in the long term, ICICI will kill HDFC Bank and HDFC Bank will go away. So please don't believe in these kind of narratives. And just to consolidate and help you understand more about this point, let me now take you through the second part of the video, where I'm going to compare the financials of ICICI with HDFC Bank and show you what I exactly mean. Okay, so here are the financials for HDFC Bank, and let us just take a very quick look here. So if you consider from 2013 onwards and look at the total income of HDFC Bank, you will see that, okay, in 2013 it was stuck at around 42,000 crores. Now it has grown massively, and the last 12 month sales have been approximately 150,000 crores. It's a huge revenue growth, right? Has it grown profitably? That's the second question that we need to ask ourselves. Yes, it has grown profitably. So from a sales profit margin perspective, no problem. So let's do the same analysis for HDFC Bank. Again, like it was stuck at around 48,000 crore. Now it has started gaining momentum. Back in 2013, HDFC Bank and ICICI Bank were almost at the same size, same level. And right now, HDFC Bank has grown bigger. It has become bigger in terms of revenue growth compared to ICICI Bank. So right now, you can check all these numbers. The growth for ICICI has been good, and it has been profitable too, right? So you can check this last column that the net income has been rising. There has been absolutely no problems either with HDFC or either with ICICI on sustainable basis. Now there is a more fundamental reason as to why both the banks are good. Now, according to Mr. Warren Buffett, when he analyzes any banking stock, so he says two things. One is that if you are analyzing any bank, then it should have cheap cost of funds, right? That's one. Second is that the asset should be less risky. So in simple terms, if you understand the business model of ICICI and HDFC, it's very similar. What they do is that, for example, you and I, when we give money to HDFC or ICICI, they take this money, they give us a rate of interest, right? For example, if I'm going and depositing 100 rupees in my bank account in HDFC, then I'm getting 2.5% on my savings account. That's the rate of interest I'm getting on savings, not FD, right? Then the bank picks that money up and it forwards it in terms of loans to other at 8%. So whatever the spread, it becomes its revenue, so to say, in simple terms. So that is how banks make money. So the access to funds should be cheap for a bank, and the risk of the funds that they are lending out should also be low. Now, both HDFC and ICICI Bank have been doing a good job in terms of balancing both these points. So there have been no systematic problems per se. There were some issues with ICICI Bank in terms of managing their NPAs, giving out loans to corporates. So that NPA problem was there with ICICI Bank. It has gone away. HDFC Bank has never had that problem at a massive level. So bottom line, what I'm trying to tell you is that both these banks, from a risk management perspective and accessing capital perspective, have been doing well. And if you strip out all the financial data and look at these two concrete points regarding these banks, you will clearly see that both the banks are pretty solid when it comes to this. Now you will ask me that, okay, Akshat, then why is it that there's so much good narrative going on about ICICI? Something might be the case can you also talk a little bit about cash flows and NIMs? So I will speak about that. So if you take a look at free cash flows for ICICI Bank, you will see that, hey, this has almost always been positive, right? So there has been absolutely no issues with the cash flows of ICICI Bank. But if you do the same analysis, right, the cash flow analysis for HDFC Bank, you will see that HDFC Bank has had some bad years in terms of its cash flows. Now, why is that? And this problem especially exacerbated during 2019 and 2020, right? And this was a period where ICICI Bank's cash flows were positive, right? Now, this was largely due to working capital change, and you can see that HDFC Bank here, the working capital changes were in thousands of crores, and this is not the right measure to measure banks, right? What you need to look at when you're looking at banking stock is something called as NIM, net interest margin, and you need to check if there has been any major fall in terms of NIM. Now, explaining NIM and explaining all the financial ratios is beyond the scope of this video, at least on this class. So what I'm trying to do is that I'll just take you through the NIM numbers and see if there has been any major dip for HDFC Bank in NIM. So honestly, there has been not. Of course, due to COVID, the NIM has come down for almost all the banks, including HDFC Bank, but there has been no systematic problem. Mr. Puri, who ran the HDFC Bank, he has left the organization very recently. So it has reflected in the stock price. So essentially, what I'm getting at is that HDFC Bank right now is still a very, very powerful stock. There is nothing fundamentally to worry about that. Now, before talking about the future of both these banks, that what these banks might look like in 10 years' time, let me also comment on a couple of other narratives that are going on in the market regarding the performance of HDFC Bank. One, it is being said that, HDFC's management quality has become weaker and a lot of people are having issues. Customer care is really bad. I'm a customer both at ICICI Bank and HDFC Bank, and I'm also not happy with HDFC or ICICI from the customer service level perspective. But honestly, I don't see a C difference between the customer care of ICICI versus HDFC. Related point here is that if you go to Glassdoor and if you check the ratings of the employees that they give to their employers, you will see that both HDFC and ICICI are at a similar level. So even from a management perspective side, the insider information that we get, it also connotates that there is not a huge difference in terms of the management style right now between HDFC and ICICI. The second narrative that is going on in the market is that, HDFC Bank has had a lot of outages in terms of its digital service, and ICICI Bank is providing better digital services. Okay, but that can be a short-term play on the stock. If you are holding HDFC Bank from a 5-year, 10-year perspective, honestly, do you really think that HDFC Bank will not be able to sort out these issues? They will sort it out. It's a simple technology adjustment. It is not that complicated. If ICICI Bank can build a digital infrastructure, then HDFC Bank can also do the same. Another perspective that is given out is that ICICI Bank is becoming a retail-only bank, and it is spending a lot of money in aggressively expanding across rural markets. Now, HDFC has also started to do the same. So it's not as if that HDFC does not have big deep pockets and it will struggle in front of ICICI to undertake rural expansion. Nothing of that stuff is going to happen. So net, what is it that I'm trying to say? That right now, both HDFC and ICICI are good stocks to buy, not a problem if you're a long-term player in this space. Now, my simple perspective in terms of buying this stock is twofold. One is that where do I see the stock prices of both these banks in 2035? So I see both the banks growing. It might happen that one bank will grow faster than the other, but fundamentally speaking, both are great buys and I'm an investor in both the stocks. That's one. Second, and more important point is that I'm worried about the future of banking. And I'm keeping a close eye because there is DeFi, decentralized finance, which is literally disrupting the financial ecosystem across the world. So I'm keeping a very keen look on this DeFi system, learning more about it. I will keep on sharing more information with all of you. What exactly is DeFi and how it is disrupting the finance space. Also, do start learning about neobanks because this is literally the next step of how digital banking will transform. I have linked it here. Please go and watch it. Now, very importantly, I will talk about a few key trends as to what will define the next leg of growth for both these banks. So first is the upselling opportunity. Now you might have noticed in the last 5 to 7 years, banks have started selling products like insurance. They have started selling mutual funds. They have started selling a bunch of different products that they traditionally never used to sell. Why is that? Because this has become a massive income stream for banks. They are aggressively selling insurance and investment options. Going forward in 10-year time, what are some of the upselling opportunities that you're likely to see in the banking space? I would say that banks have the capability to sell literally anything. It might become an advertisement shop. Why? Because most of the people are not going to the branches right now, and all the conventional banks are building their digital ecosystem. So, for example, I have not visited any of my banks in the last 1.5 years, right? I have not done that. Now, banks have all the data about me. They can sell me curated product. They can sell my data to marketing companies. They can take a look at where my money is going, etc., etc. Now, if they know my spending habit, they can offer me customized product on a bunch of different things, right from giving me special offers on what car I could buy, right from giving me information on new houses that I can scout in Goa if I want to live there, so on and so forth. So the opportunities to upsell are endless, and I think both ICICI and HDFC Bank will continue to explore this digital medium. The second opportunity that I see for these type of banks is that they can go and partner with more and more retailers and distributors. They might do it even at a wholesale level, right? Because, for example, HDFC Bank has more corporate clients. Now, if they can offer them corporate conveniences, if HDFC Bank knows and they know what kind of businesses I run, they can give me some business solutions where I can go and not only avail finances for my business, but can do a bunch of different things. For example, where can I organize conferences regarding my YouTube channel? How I can partner with gift giving firms for my employees. So there are numerous partnership opportunities. So these are the type of avenues that banks would continue to explore. So the growth has just started. It has not ended. Don't just assume that because HDFC Bank is now sitting at 150,000 crores of revenue, revenues will not grow. It will continue to grow because banking is such an important sector. Banks have all the data about you. They are in the process of understanding how they can leverage that data to build more partnership and do more cross-selling. And the best part is that if ICICI Bank builds a better digital infrastructure and sells me more products, guess what? HDFC Bank will also figure out how to do that. It's not as if that ICICI Bank will be able to hide its technology or digital architecture and HDFC Bank will not be able to copy it. They will not be able to build that kind of moat, which will be massively different from one another. The Indian finance market is huge and there is massive space for both HDFC and ICICI to grow together. Therefore, I am an investor in both and I would continue to buy both of these stocks. I hope you enjoyed the video. Please give it a thumbs up, check the link in the description box, and I will see you the next time.